Venturing out, investing across the pond. Investing is like exploring a vast ocean of opportunities. You can choose to stay close to the shore within the familiar waters of your home country. Or you can be adventurous and set sail for distant lands seeking potentially greater rewards. Investing overseas is like that adventurous voyage. The United States and the United Kingdom are two such lands that have long beckoned global investors. These economic powerhouses, with their diverse industries and mature financial markets, offer a wealth of investment possibilities. But like any good explorer, you need a map. This essay is your guide to navigating the investment landscapes of the USA and the UK in 2025. We'll delve into their economic climates, stock markets, real estate sectors, and more. By the end, you'll have a clearer picture of which market might be your ideal investment destination. Remember, investing always involves risk. Past performance is never a guarantee of future returns. This essay is for informational purposes only and should not be considered financial advice. Always consult with a qualified financial advisor before making any investment decisions. Economic landscapes, a tale of two nations. Before diving into specific investment avenues, it's crucial to understand the overall economic health of the USA and the UK. Think of it as checking the weather forecast before setting sail on your investment journey. The USA, with its vast natural resources, entrepreneurial spirit, and dominance in sectors like technology and innovation, has long been an economic powerhouse. Its economy is dynamic and adaptable, constantly evolving to stay ahead of the curve. Across the Atlantic, the UK boasts a mature and diversified economy. While it has faced recent challenges like Brexit, its strengths lie in finance, services, and a strong export market. The UK is known for its stable political system and strong regulatory framework, which can provide a sense of security for investors. Both nations face their own sets of challenges, from inflation and interest rate hikes to geopolitical uncertainties. However, their underlying economic fundamentals remain strong. Stock market showdown. Growth versus dividends. The stock market is often the first port of call for investors seeking to grow their wealth. Both the USA and the UK are home to some of the world's largest and most liquid stock exchanges. The US stock market, particularly the tech-heavy Nasdaq, is renowned for its growth potential. Companies like Apple, Amazon, and Tesla have consistently delivered impressive returns, attracting investors seeking high-growth opportunities. The UK stock market, anchored by the FTSE 100 index, is known for its stability and dividend payouts. It features a mix of established blue-chip companies across sectors like finance, energy, and consumer goods. Investors seeking a regular income stream often find the UK market appealing. When choosing between growth and dividends, consider your investment goals and risk tolerance. Are you looking for rapid capital appreciation or a steady stream of passive income? Section 4, Currency Currents, riding the dollar and the pound. Investing overseas inevitably exposes you to currency risk. Fluctuations in exchange rates can either amplify your returns or erode them. The US dollar, as the world's reserve currency, enjoys a certain level of stability. However, factors like interest rate differentials, government policies, and global economic conditions can impact its value. The British pound, while a major global currency, has experienced greater volatility in recent years, particularly in the wake of Brexit. Economic data releases, political developments, and investor sentiment can all influence its value. Managing currency risk is crucial when investing overseas. You can mitigate this risk through hedging strategies or by investing in assets denominated in your home currency. Section 5. Brick-and-mortar battles, real estate rundown. Real estate has long been a favored investment avenue, offering the potential for rental income, capital appreciation, and a tangible asset. The US real estate market is vast and diverse, with major cities like New York, Los Angeles, and San Francisco attracting significant investment. However, property prices in these cities can be exorbitantly high, making it a challenging market for new investors. The UK real estate market, particularly in London, is similarly competitive. However, other major cities like Manchester, Birmingham, and Edinburgh offer more affordable entry points. Factors like stamp duty, property taxes, and rental yields vary significantly across regions. Thorough research and due diligence are crucial before investing in real estate in either country. Consider factors like location, property type, rental demand, and potential for capital growth. Section 6. Taxing matters and investment avenues. Navigating the tax implications of overseas investments can be complex. Both the USA and the UK have their own tax laws governing foreign investments, and it's essential to be aware of these. In the USA, foreign investors may be subject to capital gains tax on profits from selling stocks or real estate. Dividends from US companies may also be subject to withholding tax. The UK also levies capital gains tax on profits from investments. However, there are allowances and exemptions available. Dividend income is taxed at different rates depending on your income tax bracket. Both countries offer a range of investment vehicles, including individual retirement accounts, or IRAs, in the USA, and individual savings accounts, or ISAs, in the UK, that offer tax advantages for investors. Section 7. The verdict: finding your investment sweet spot. So which market reigns supreme for investors in 2025? The answer, like most things in finance, is it depends. If you're chasing high-growth opportunities and are comfortable with a higher risk appetite, the US market, with its dynamic tech sector and innovation-driven economy, might be your ideal playground. If you prioritize stability, dividend income, and are perhaps more risk-averse, the UK market, with its established companies and history of dividend payouts, could be a better fit. Ultimately, the best market for you hinges on your individual investment goals, risk tolerance, and time horizon. Diversification across both countries and asset classes remains a prudent strategy to mitigate risk and potentially enhance returns. Remember, this essay is just a starting point. Before making any investment decisions, consult with a qualified financial advisor who can provide personalized guidance based on your unique circumstances.